I remain optimistic about Australia's prospects. Our economy has weathered the pandemic better than was expected. Jobs growth is strong and the unemployment rate is low. Household and business balance sheets are in good shape. Wages growth is picking up and inflation is closer to target. These are all positive developments. At the same time, though, the country does face some challenges. The pandemic is not yet behind us, and a sharp pickup in inflation, particularly in the United States, has added a new source of uncertainty to the outlook. We also face the challenge of lifting productivity growth, including through investing in the workforce skills and technologies that are really important to generating increases in real wages over time. And over time, and as conditions allow, we'll face the challenge of navigating a return to more normal settings of monetary policy. So while I'm optimistic about the country's prospects, we do face some challenges that we need to give attention to. In looking to the year ahead, though, a useful place to start is to look back at the year just past and see what lessons we can draw. I think the table in my first chart here helps do that. It shows the outcomes for the key economic variables last year and the forecast that I talked about this time last year when I was last at the National Press Club. I think the final column of this table tells a pretty clear story. The economy performed significantly better than we expected last year. GDP growth is likely to have been around 5% in 2021. That compares with our forecast a year ago of 3.5%. This outperformance is despite the serious setback caused by Delta in the third quarter. As you can see, the unemployment rate has also declined by much more than we had expected and now stands at just 4.2%, the lowest rate since the peak of the resources boom. These stronger GDP and labour market outcomes have translated into higher inflation, significantly higher than we were expecting. We had expected underlying inflation to be 1.5% last year, yet the actual outcome was 2.6%. Headline inflation was higher still at 3.5%, boosted by a large increase in petrol prices and the cost of constructing a new home. As you can see, wages growth was also higher than we were expecting, although the difference here is smaller than for the other variables, and overall wages growth remains low. I think this experience reminds us of the difficulty of economic forecasting in a pandemic. I think we all know that, and I'm very conscious of that difficulty. But it also points to three broader observations. The first is the economy has been remarkably resilient. That's good news. The second is that the link between the strength of the real economy and prices and wages still exists, remains alive, that link. And the third lesson is that the supply side really matters, not just for the economic activity, but for prices as well. I think each of those three observations are also going to be relevant for the year ahead. The Reserve Bank will be releasing its latest economic forecasts on Friday and the quarterly statement on monetary policy. Ahead of that, I can summarise the key economic variables for you. And I'm going to start with GDP. As you can see here, our central forecast is that the Australian economy will grow by 4.25% this year and then around 2% next year. This is a stronger outlook than we had 3 months ago, especially given the higher than expected starting point. One source of ongoing certainty is the possibility of further virus outbreaks, and the past month or so have reminded us of the risks here. Prior to Omicron, the economy had established strong positive momentum. It had bounced back quickly following the Delta-related lockdowns. This momentum, though, wasn't sustained into the new year, with Omicron leading to many people having to isolate at home. It interrupted supply chains and it affected spending as people limited their activities. Yet, once again, the economy has shown remarkable resilience. Australians have adjusted and they've adapted, and we still expect GDP growth to be positive in the March quarter, although only modestly so. The worst of the disruptive effects from Omicron now appear to be behind us. Supply chains and workforce management issues, which have been significant, are gradually being addressed. And I think as case numbers trend lower over the weeks ahead, the economy will bounce back strongly and we'll see a sharp pickup in spending. While Omicron has delayed the recovery of the Australian economy, it's not derailed it.